So just now we have seen the definition of audit. Now let us move on to the objective of auditor. So it is simple. Whatever, the activity you are doing, whether you are applying a procedure or whether you are following a process, there should be one objective behind it, isn't it? So in a single sentence, if you ask Pavan sir, what is the objective of audit or what is the objective of the auditor? It is simple: to express an opinion on the financial statements. So why am I conducting audit? To report on the financial statements. Why am I conducting audit? To report on the financial statements. So what my report consists of? Now try to understand this. Audit reports and financial statements are used by laymen. So a doctor might invest money in a company. An engineer might invest money in a company. A lawyer might invest money in a company. A businessman might invest in a company, or even an illiterate, uneducated person might invest money in a company. But he wants to understand the financial statements and audit reports. So if it is too much of technicality, they might not be able to understand. Now you look at the nature of financial reporting. Even chartered accountants and chartered accountancy students at times might not be able to understand what it is. So how a layman understands? So enable a layman without any great financial accounting knowledge or auditing knowledge to understand how the company is performing, how the management is performing, whether the corporate governance standards are followed, whether transparency is being followed throughout the management. To ensure all these things, these investors rely on certain external professional, and he is a chartered accountant. That is the background of audit, isn't it? So because I am trying to fill the gap being the auditor, my primary intention is to help the readers of financial statements by communicating to them whether financial statements as a whole have been drawn up properly. So a shareholder has balance sheet in his page. I am the auditor. So X Limited, one person, Mr. A, has invested money. I am the auditor. So when he has balance sheet as on 31st March 2023, he has the balance sheet and he's asking, Pavan sir, ye kya hai? What is this? Is it prepared properly? I do not know. So I do not know the rules of the game, how this balance sheet is to be prepared. I do not know. Pavan sir, you are a chartered accountant, you know na? Yes. So please tell me whether this is prepared properly. I have to give that reasonable assurance to him. So as an auditor, first I should obtain reasonable assurance from that examination I have conducted. I should obtain reasonable assurance and I should give that assurance to the reader of my audit report, to the user of the financial statement as well. So when I'm conducting examination, I should get the reasonable assurance. And through my audit report, I should transfer that reasonable assurance to the shareholder or the investor or the person who's reading my audit report, the user of financial statements and the user of audit report. So I'm giving that reasonable assurance. So my reasonable assurance involves basically two things. Point number one, dear Mr. A, don't worry. I have verified the financial information of X Limited. I have verified the financial statements of X Limited for the period covered in the audit. Point number one, the financial statements are drawn properly. Don't worry. Now he will ask, what do you mean by financial statements have been prepared properly? Who defines whether it is, prepared properly or no? Underline question mark. Whether financial statements are prepared properly, underline question mark. So what do you mean by properly prepared? Excellent question, isn't it? To write P&L and balance sheet, to prepare your financial statements, there is something called acceptable financial reporting framework. To prepare financial statements, there is something called acceptable financial reporting framework. Now the question is whether the company has followed that particular framework. For example, Schedule 3 to the Companies Act. For example, accounting standards. For example, regulatory requirements, accounting standards. So whether the company has followed all these rules of the game, whether financial statements have been prepared in compliance with the rules of the game. That is my question number one. Yes, as an auditor, I'm telling you that the financial statements have been prepared in accordance with the acceptable financial reporting framework. Now shareholder is happy. Shareholder is saying, Amma, thank God. Pavan sir, point number one, I'm happy. But Pavan sir, you said you'll give reasonable assurance on two things, but you covered only one. What is the second one? Second one is whether financial statements are free from material misstatement. They are free from material misstatement. Now, what is a misstatement? What is a material misstatement? We have covered extensively in one of the other classes. Okay, but to give you a very brief summary without deviating from this particular question, to give you a very brief summary, material misstatements or any misstatements are caused by either frauds or errors. So basically what I'm saying is, if I'm saying as an auditor, the financial statements are free from material misstatements, what do I mean? That means there are no frauds and errors that have impacted materially. So big frauds, big errors are not there in financial statements. Pawan sir, what about minor ones? Minor ones might be there. We cannot eliminate all the minor accounting errors, accounting frauds, or something you call small things. We might not be able to. So those which impact the decisions, those which are significant, those which are to be considered while investing money in the company, that kind of big frauds and errors are not. So what is the summary? The objective of audit is to express an opinion whether financial statements are showing true and fair view or no. Report on financial statements we call. So we are giving a reasonable assurance of one, whether financial statements have been prepared as per acceptable financial reporting framework and whether financial statements are free from material misstatements. While conducting this independent examination called audit, we have to follow standards and audit prepared by the Institute of Chartered Accountants of India. And also we need to give all the communications to the management or to the shareholders or to those charged with governance or to regulatory authorities or to audit committees, wherever, whatever is to be communicated. It is my duty as an auditor to cover all these things, to communicate all these things to relevant parties. So majorly to shareholders, basically to the members of the entity. After that, there are certain communications to management and other parties also. So this is overall objective of the auditor. I hope you are clear about this question and you understand this area. Is this clear?